Welcome to Highway Herald, your roadmap to the latest in auto and the global forces steering it. Today, we're diving into a story where politics, finance, and horsepower collide. Tariffs, deficits, and a brewing rebellion. America's economic playbook is being torn apart and rewritten in real time. President Trump's latest tariff barrage, 25% on heavy-duty trucks and a stunning 100% on foreign pharmaceuticals, has rattled markets far beyond trade. Canada, China, and Brazil are quietly offloading U.S. treasuries, gold is soaring, and confidence in the dollar is wobbling. The world's financial engine is shifting gears, and we're here to break it down. America's debt engine, a superpower running hot. For decades, America's greatest economic weapon wasn't tariffs or trade dominance, it was trust. Global investors treated U.S. treasuries as the world's safest asset, allowing Washington to borrow endlessly at low cost. That faith fueled everything from wars and stimulus checks to the EV transition, keeping mortgages, car loans, and business credit affordable. But today, that trust is starting to waver. Political fights over tariffs, debt ceilings, and fiscal policy have injected uncertainty into what was once considered risk-free. As investors demand higher yields to offset instability, borrowing costs rise across the board, pressuring consumers, automakers, and industries alike. Even modest treasury sell-offs by nations like China or Brazil ripple through global markets, signaling strategic diversification rather than panic. Yet, if this quiet shift becomes the new norm, America's ability to finance its ambitions cheaply could erode over time. The U.S. debt engine still runs, but its once smooth throttle is starting to sputter under global skepticism. And as Washington's borrowing machine sputters, the next chapter shows how those tariff sparks are triggering a chain reaction far beyond trade policy. The tariff whiplash, from "make them pay" to "they sold our debt." Tariffs grab headlines, but the real retaliation often happens in silence. When Trump's 2025 trade offensive slapped 10% baseline tariffs on imports and heavier duties on Canada, China, and Brazil, those nations didn't strike back with counter tariffs. They targeted America's financial core instead. By quietly reducing their U.S. Treasury holdings, they raised Washington's borrowing costs, proving that finance can be weaponized just as effectively as trade. Each country had its motive. China shored up the yuan, Brazil diversified reserves, and Canada protested tariffs on steel and autos. The result? Higher treasury yields that ripple through the entire economy, from corporate loans to consumer car payments. For automakers, this double punch of pricier inputs and more expensive financing squeezes profits and dampens sales. Politically, tariffs look like victories. Financial pushback, however, is invisible until it surfaces as rising interest rates, costlier credit, and strained growth. In the end, America's "make them pay" strategy might just be making everyone pay, starting at home. Before we delve deeper, don't forget to hit that subscribe button and turn on notifications. Your support fuels Highway Herald to keep bringing you smart, passionate breakdowns where cars, currency, and global politics intersect. Now, let's shift gears and explore how one ancient asset is stealing the spotlight. Gold's comeback, the sound of silent defiance. When faith in paper wanes, metal shines. Gold's rally to record highs isn't a coincidence, it's a referendum on trust. Central banks worldwide are hoarding bullion at a pace not seen in decades, marking a shift from dollar dependence to diversification. After Western sanctions froze Russia's reserves in 2022, other nations took notes. They realized if your reserves sit in someone else's system, they can also be used against you. Gold, by contrast, answers to no one's central bank. From Beijing to Brasilia, from Riyadh to Ottawa, financial planners are quietly rebalancing, shaving treasury exposure, adding gold, euros, and even some yuan to the mix. This isn't the death of the dollar, but it's the end of blind faith in its permanence. And just like automakers are regionalizing supply chains, friend-shoring battery plants, and diversifying chip sources, central banks are friend-shoring their reserves. The message is the same: reliance on one hub is a risk. If the last decade was about global integration, this one's about controlled disengagement. And Washington's tariff gambit may have accelerated that shift more than anyone expected. But not every country plays this game the same way. Let's see how Canada, China, and Brazil are each rewriting the financial rulebook. Different playbooks, one message. Canada, China, and Brazil may have distinct goals, but they're sending the same message. The world is hedging against America's tariff turbulence. Canada, once Washington's dependable ally, responded to 2025's steel, aluminum, and auto tariffs with a subtle protest, quietly selling U.S. treasuries and diversifying investments abroad, signaling that loyalty has limits. China, ever strategic, has steadily trimmed its treasury holdings for years, using the move to defend the yuan, boost gold reserves, and expand alternative trade and payment systems. It's not abandonment, it's preparation for autonomy. Brazil, a commodity powerhouse, rebalanced reserves after tariffs hit its exports, aiming to cushion volatility while tackling illegal gold flows through new gold DNA tracking. Despite differing motives, the three share one philosophy: relying on a single currency or creditor is a risk no nation can afford. Their actions normalize diversification as prudent policy, not rebellion. And that quiet shift is reshaping the foundation of global finance, one portfolio at a time. And as this financial rebellion ripples across continents, it's not just policymakers feeling the strain. Main Street is next. Main Street ripples from rates to the road. What does this global financial chess match mean for everyday people, for car dealers, engineers, or buyers? In short, it's about the cost of capital. As foreign investors pull back from U.S. treasuries, Washington must offer higher yields to attract new buyers. Those higher borrowing costs ripple through the economy, raising rates on car loans, factory expansions, and supplier financing. Add tariffs to the mix, and the strain deepens. Imported materials like aluminum, lithium, and semiconductors grow pricier, inflating production costs even for vehicles built in America. Automakers trim margins, dealers face slower sales, and consumers hesitate as payments climb. The result is an industry forced into caution, prioritizing modular designs, shorter model cycles, and good-enough hybrids over bold EV ventures. Until battery supply chains localize, electrification remains at the mercy of global finance. Ultimately, this isn't just an auto story, it's about confidence itself. As borrowing grows costlier, optimism fades, investment slows, and innovation idles at the red light. And that brings us to the bigger picture. Verdict: the Golden Rebellion, America's debt empire under siege. What began as a tariff crusade to shield American industry has evolved into a global financial rebellion. Instead of retaliating with new trade barriers, Canada, China, and Brazil sold U.S. debt and stacked up gold. A quiet strike at the core of America's power, its ability to borrow cheaply and endlessly. For the first time in decades, gold has outshone treasuries in central bank reserves, signaling a shift from dollar dependence to diversification. Trump's tariff strategy may have been framed as economic nationalism, but its unintended legacy could be the gradual erosion of dollar dominance. The real question now isn't whether tariffs can revive U.S. manufacturing. It's whether Washington's lenders will keep funding its ambitions. If they walk away, borrowing costs surge, industries tighten budgets, and every electric vehicle, factory, or highway project grows pricier. This golden rebellion may be silent, but it's reshaping global finance ounce by ounce. So now, over to you. Do you think Trump's tariffs will strengthen American industry or speed up the dollar's decline? How will rising interest rates shape car affordability and innovation? And is gold's comeback the start of a new world order, or just a momentary glint? Drop your thoughts in the comments below. If you found this video insightful, don't forget to subscribe for more updates on global markets, vehicles, and everything that drives the world forward. Thanks for watching, and see you next time. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.